In this video, we're going to look at the week ahead. It is the week ending in July 12th, 2024, guys. Going to start here with some of our news headlines and then move on to what I'm seeing here on the charts. So guys, starting with our news headlines, on Tuesday, July 9th, we have the Fed Chair Jerome Powell speaking. On Wednesday, we have Fed Chair Jerome Powell speaking again. So that's going to be coming out on Tuesday and Wednesday. Fed Chair Jerome Powell is speaking. On Thursday's looking like it's going to be a pretty impactful day, along with Friday. So Thursday, July 11th, and Friday, July 12th, we have some economic events coming out. Starting with the core inflation rate month over month is coming on Thursday, July 11th. The forecast is at 0.2%, prior at 0.2%. Core inflation rate year over year forecasted at 3.4%. Prior was 3.4%. So they're expecting no change. And then we have the inflation rate month over month coming out, and we have the inflation rate year over year coming out. And then, guys, on Friday, we have the Producers Price Index coming month over month. Prior negative 0.2%, forecast 0.1%, and then we also have the Michigan Consumer Sentiment Preliminary coming out. So guys, we do have some economic news coming out this week from Tuesday through Friday. Okay guys, with that being said, I'm now going to head over to the charts. Going to start here with a look at the ES on the weekly chart. Okay guys, so the first thing that I want to mention here from a technical perspective is that we continue to trade into new and uncharted territories. So there's not a lot of price action on the left side of the screen for us to look at. So the only thing that we can really look at are some indicators like the average true range and then standard deviation projections, but we don't have a lot of price action on the left for us to look at. So last week's candle, we ended right at the high of the candle. So last week we closed at 56.15. The high was 56.26, so we were just 11 points off of that all-time high. Now, the next thing I want to talk about is if we look at the prior 10 weeks of trading action, only 3 of them on the ES have ended in a down week. So 7 of our last 10 weeks have ended higher. Finally, guys, from the weekly perspective, something that's really striking me and that I wanted to bring to y'all's attention is that notice that the average true range, or the average amount that the S&P 500 futures have been moving, has steadily been going down. So we're currently at about 120 points of movement on average per week. Notice that during most of 2022, we were up around 200 plus points per week. So the market has really slowed down. It's continuing to advance, but it's advancing slower than it was moving back during 2022. So one thing that I want to show you here is that notice for most of 2022, the market was moving a lot more, on average 200 points a week, whereas now it's moving only 120 points a week. So if we look from about May of 2022 to March of 2023, that period of time, the market was moving considerably more in terms of points per week than it is now. So that is something that I wanted to bring to your attention. Now, as you know, and as I've talked about in my video on understanding volatility, when the market slows down and it has a period of low volatility, that will be followed, or it should be followed, by a period of expanding volatility. So what does that mean? Well, if we're now trading at about an average of 120 points a week, maybe coming into 2025 after the presidential election, the market could really ramp up to 200 points on average per week again, which would make sense to me, that we have contracting volatility now during the election year. The market's waiting to see who the next president is, and then we could have an increase in volatility after the presidential election. So that is something that I wanted to bring to your attention. Now, looking at the ES from a daily perspective, we can see that our average true range has continued to go down. So our average true range now on the daily perspective is only at 48 points, whereas earlier in May we were up to 69 points per day. Now we're back down to about 48 points. So a period of lower volatility as we continue to just churn higher. We're churning higher at a slower pace than we were before. So looking at the daily perspective, guys, we had Tuesday, Wednesday, and Friday's candle. So we had a holiday on July 4th. We have 3 straight up days in a row. I also want to bring to your attention that So guys, we ran on this buy side liquidity here. So our buy side liquidity that we had located at about 55.88 spot 50. Notice that the market has now traded above that. So we took out that buy side liquidity at 55.88. And now from an ICT perspective, guys, what I'm seeing is notice that around that 50, I'm going to call it 55.02 spot 75, notice that we have plenty of sell side liquidity here. So we have sell side liquidity located at 55.02 spot 75. Now, what do I mean by we have sell side liquidity at that level? Well, if you follow Inner Circle Trader, if you follow some of the stuff that he talks about, a lot of folks that have been holding on to trades long, they're going to have their stop losses below these lows here at 55.02 spot 75. You're going to have a lot of pool of orders or liquidity lying there. And so I would expect that if the market is going to turn around next week and it's going to come back down, it's probably going to run that 55.02 spot 75 level, come back down and run into that sell side liquidity and pick up those orders. That's basically what I'm talking about. Okay, guys, so with that being said, what am I expecting for next week? I think the market is probably going to have, as it usually does on Sunday and Monday. Sunday and Monday, we're probably looking at a trading range. What I expect to happen coming into next week is I think we're going to come back down and run this sell side liquidity. I think we're going to run this sell side liquidity, and that's what we're going to do. Okay, guys, sorry, I'm just fixing up some of my window captures here. Okay, so sell side liquidity located here at 55.02 spot 75. I'm expecting that the market next week is probably going to want to come back down and run on that sell side liquidity. I think it's also worth noting that our volatility has been consistently lower for a few weeks. So notice that since about May of this year, volatility has been coming down on a daily basis, meaning that these candles on average are getting smaller. So we could have a period of expanding volatility coming up soon as we've had contracting volatility. Okay, let's head over to the NASDAQ, give you my brief thoughts on this. Let's head over to the weekly chart. Trading at all-time highs here is the first thing that you should immediately notice. Our final close on the NASDAQ was at 20,591 spot 50. Last week's candle closed near that all-time high, right near the all-time high. We have sell-side liquidity on a weekly basis located at about 19,725 spot 75. That's something to notice. Last week's candle was a small range candle. One thing I want to tell you about the NASDAQ is similar to the ES. We've been in a period of somewhat contracting volatility, although last week's candle was a pretty large range candle, so you can see that our average true range has ticked up to 609 points on average per week. Let's head to our daily chart. Seeing something very similar as we are on the ES with sell-side liquidity below current market price. So we have sell-side liquidity at 19,728. I would not be surprised if the market wants to come back down and run on that. We had 4 straight days in a row last week of higher price action, so I'm expecting that we're going to at least have 1 day down come next week on the NASDAQ, as we've had 1, 2, 3, 4 straight up days. Also, guys, notice that we ran on our most recent buy-side liquidity at 20,371 even, so we ran on that buy-side liquidity, and Friday's candle closed near that all-time highs. Okay, guys. So that's what I wanted to mention there. Let's now have a look at some of our other items on a weekly and a daily basis, looking at the week ahead. Let's start with gold futures. Last week, gold futures final print came in at 23.99.8, so we had a big ramp up in gold futures. We traded and closed above the prior 3 weeks of price action. Our average true range here on gold is showing $72.50. So we've had pretty big ranges here on gold, or I would say pretty large volatility on gold. Let's head over to our daily chart. Daily chart, gold on average is moving $33.40. That is slightly down from our weeks prior. Friday's candle closed above quite a few candles. So Friday's gold candle traded and closed above the prior 16 days worth of price action. Notice that we have buy side liquidity located here at 24. We have buy side liquidity located here at 2406.7. The market looks like it wants to run on that buy side liquidity. And then I also want to draw to your attention that we have a fair value gap here sitting above current market price. So if you notice, we have a sell side imbalance, buy side inefficiency that the market is coming into. So gold has reason to move higher. I'm expecting that gold is going to move higher on Sunday into Monday, run on this buy side liquidity, and then come into this inefficient price action. So from 2409.1 to 2431.9, we have a sell side imbalance, buy side inefficiency, and I'm expecting that the market wants to run on that. So here we have a fair value gap there. Wanted to just bring that to your attention. So I'm expecting that gold is going to move higher. Now let's have a look at crude oil from a weekly perspective. Okay, guys, crude oil. First thing that comes to your attention, and that should come to your attention, is 4 straight weeks higher in crude oil. Final print last week was at 83.44. We have buy-side liquidity here at 86.23. In terms of inefficiencies, nothing that I'm seeing there. We do have a long wick inefficiency here. So the consequent encroachment would be at 89.75. So the market did trade somewhat inefficiently here on the week of Monday, 25th of September. That's that long wick where we dipped into that prior buy-side liquidity. Guys, what I want to mention to you is that notice that the ranges here, the average true range of crude oil, continues to go down. Last week, crude oil on average only moved $4.20, whereas back during 2022, it was moving way, you can see that volatility on crude oil was way higher during 2022 than it is now. What that indicates to me, guys, is that here maybe after the election or after the summer driving season, I'm expecting that crude oil's volatility is going to pick up after a period of contracting volatility. We expect expanding volatility. So in terms of, what markets could be moving in the future, I'm expecting that crude oil is going to be one of those markets that is likely to experience an increase in volatility, as volatility really has been falling on crude oil for quite some time now. Moving down to our daily chart, we ran some short-term buy-side liquidity. So I think likely what we're going to see immediately on crude oil is we're probably going to see a move back down. Probably going to see a move back down and run on 80.16 as we've just run on this buy-side liquidity. But also notice that crude oil is now only moving $1.68 per day on average. That volatility is way lower than it was in the past. So again, if we have a period of contracting volatility, we expect a period of expanding volatility. So I would expect that crude oil is likely to move a lot more coming in the future. So that's something to keep an eye out for. Finally, guys, I want to talk about the Euro futures. Okay, guys, Euro futures final print last week was at $1.08, so 1.0875. Last week, the Euro futures moved higher, closing above the prior 2 weeks of price action. Now, notice again here on Euro futures, volatility is way down. So on average, the Euro futures are only moving 0.0127. That means that Euro futures are likely to experience a period of expanding volatility. Again, crude oil has been contracting. We saw contraction in volatility on the ES and on the NASDAQ. We're also seeing the same thing here on the Euro. So guys, during these summer months, we're seeing a contraction in market volatility across different markets. Okay, what would I expect here from the Euro futures? Just briefly looking at this chart, we have buy-side liquidity here. Would not be surprised if the Euro futures want to run on that buy-side liquidity. We also have a long wick inefficiency here, the midpoint of which we're approaching. I would not be surprised if the market wants to approach the buy-side liquidity and then move lower. So I'm expecting probably a trading range or mixed action on the Euro futures next week. Just briefly looking at the chart, that is what I would be expecting. Okay, guys, let's have a look at Bitcoin. Bitcoin has been moving lower. Final print was at 56,575. Our low last week was at 53.6. That's 53,600. We've seen on the average true range that Bitcoin is now moving over $6,000 per week on average. So we've had an increase in volatility in Bitcoin, leading me to believe that we're likely to see probably a small range candle next week, probably a $2,000 to $3,000 move. Can't say that for certain, but because we've been expanding in volatility, I would be expecting volatility now to contract. So looking down at the daily chart, what would I be expecting for Bitcoin? I expect Bitcoin next week probably going to trade within a small range. I would expect a small range between 53,655 and 60,705. I would not expect there to be a large range on Bitcoin next week. I think the market's probably going to cool down and trade within a defined range. And so that's what I would be expecting for Bitcoin next week. Okay, guys, let's also have a look here at the Dow Jones. Just going to tell you briefly what I'm expecting here on the YM futures. Last week, the Dow did not move very much. Okay. Not a lot here to talk about on the Dow Jones. I'm actually going to skip that. Let's talk about the 30-year bond futures. So this is on the ZB, guys. ZB last week closed at 118.21. So we had a little bit of an increase here in the ZB. Let's go down. You notice that the volatility is also contracting on the Treasury bond futures. So only moving 2.28 on average. Let's look at our daily chart, tell you what I'm expecting. First thing I want to do is I want to outline the buy side liquidity, outline the sell side liquidity, and then I'm looking for any inefficiencies. If you're not sure what inefficiencies are, guys, they are just, you need to go study your ICT. Okay, so the Treasury bond futures coming up here on an order block. The midpoint of that would be at 119. We have a fair value gap that the market traded into. I'm expecting that the Treasury bond futures are likely to come and trade up into about that 119.2. I do not foresee the ZB reaching that buy side liquidity at 120.24 next week. I think that's a little bit too far. Our average daily movement is only 1.10. So average daily movement, it would take us, we could get there next week. Not something that I'm expecting. I think we're likely to see a trading range here on the ZB next week. A little bit of mixed action is what I would be expecting. But we do have a fair value gap sitting above. We just traded into a fair value gap, the midpoint of which is 117 spot, about 118. Okay, guys, so I'm going to leave you with my thoughts on what I'm expecting on the NASDAQ. I'm going to outline our liquidity and inefficiencies. This is on a daily perspective. Okay, guys, so what have I done here? Well, I've outlined where the liquidity is, so that we have buy side liquidity above our all-time highs at 20,639 spot 50. I do expect that the market, I think next week that the NASDAQ is likely to just to pop above that. So I expect that the market is going to, at least maybe in Sunday's overnight trading or coming into Monday morning, we're probably just going to run that buy side liquidity pretty quick. Okay, so I am expecting the market to make a new all-time high. I would be expecting that. Now, on average, we're moving 263 points per day, which that means that the average candle looks about like that. So if we multiply that by 5, could we reach that sell side liquidity below 19,728? Yes. Am I expecting that next week? No, I am not. What I expect that the market is likely to do next week is pop above the buy side liquidity here. I then expect it to come back down, trade into this fair value gap, and then probably chop around a little bit. So we have 2 fair value gaps or inefficiencies below current market price. So notice this, fair value gap here, fair value gap here. I expect that the market is going to want to come back and at least trade into that top fair value gap, but maybe dip into that second fair value gap as well. But I'm expecting that the market is going to pop above that buy side liquidity and then come back down, trade at least into that first fair value gap, the higher fair value gap of the 2, probably come in, maybe trade into that second fair value gap as well. I'm expecting that next week's candle is probably going to be a small one. I'm thinking that there's not going to be huge movement next week, but that's just from what I'm seeing here on the chart. And all right, guys. Finally, I want to give you the outline for the ES. So whenever you're outlining your chart from an ICT perspective, you want to note down where the liquidity is and then where the inefficiencies are. Okay, so buy side liquidity here, sell side liquidity here, fair value gap here, and fair value gap here. Okay, guys, so we have buy side liquidity above 56.26 evens. I would expect that the ES is likely going to make a new all-time high next week and run on that buy side liquidity. We have sell side liquidity below 55.02 spot 75. I'm not expecting that the market will run on that next week, although it is possible. In between our prior price action, we have 2 fair value gaps, buy side inefficiency, buy side imbalance, sell side inefficiencies, or BISSIes. So I expect that the market's at least going to pop up to that buy side liquidity, trade down into that first fair value gap, and maybe pop into that second fair value gap. But I'm not calling for that. I think at least we're going to run the buy side liquidity, and we're likely to come back into about the 55.78 area, maybe Tuesday, maybe Wednesday. That's my current thinking on that. Notice, though, that our average true range or volatility has been moving down. So we're only trading on average $48 a week. And then let's have just a brief look at maybe moving average. So I'm going to put on a 20 period simple 20-period simple moving average, and as you can see, the market is trading well above that 20-period simple moving average. Let's briefly have a look at the market with the Bollinger Bands. So as you can see, the ES bounced off of that 20-period simple moving average, or in other words, it bounced off that blue line there. This is a 3 standard deviation Bollinger Band, and as you can see, we are targeting that 3rd standard deviation, or way over there. Let's move that down to the 2nd standard deviation, and as you can see, as we move down to the 2nd standard deviation, the market somewhat rejected that top red line. So I think that's in line with what I'm seeing, guys, which is the market is slowing down, and so that's what I'm seeing there. Okay, guys, this has been Our Trades, back with another video. I hope you enjoyed it. Coming into next week, I'm expecting, pretty low to moderate volatility. On the ES, I'm expecting it to run the buy-side liquidity, so to reach a new all-time high. On the NASDAQ, I'm expecting it to reach a new all-time high as well, but I'm expecting both will probably get a pullback next week as well. Bitcoin, I think, is going to have a small, Bitcoin futures probably going to have a small constrained range next week. That's what I'm expecting. I would not expect Monday, guys, so because we don't have a lot of economic news coming out on Monday, I'm thinking that Sunday and Monday's trading is likely to be pretty muted. We have our biggest news is going to be that CPI coming out on Thursday, so I'm expecting most of the movement next week for the week ending in July 12th. I expect most of that movement is going to come in on July 11th and July 12th. And that's when our CPI and our PPI comes out. So if you're trading Sunday and if you're trading Monday, what I would be expecting is low volatility, probably trading ranges. I would not expect massive movement on Sunday or Monday. Okay, guys, thank you, and I hope you enjoyed this video. This has been the week ahead for the week ending July 12th. If you want to support this content, support this channel, please make sure to like, comment, subscribe, and use the affiliate links in the description box below.